Hey friends, this week on the Ferguson Home, we're going to talk about the new child tax credit. So this is a big deal. I know you've got lots of questions about it, so stay tuned for more information about this year's tax changes.
Welcome to the Ferguson Home. We're so glad you joined us today. If you have not subscribed to our channel,
click the button.
Click the button now. That would bless us to let us know that there are people watching, but also share, because our goal is to provide topics of conversation for you and your spouse, or if you're a single parent, for you and a friend to discuss these hard topics that sometimes we just let kind of go under the rug. What's the phrase? I don't even know. But we want to bring up the conversation and kind of lob you a softball and let you discuss it to increase your communication skills, right?
That's right.
Yeah.
That's right.
Not forget anything.
Nope.
Okay, so this past week we got this in the mail. Actually, maybe this way. From the Department of the Treasury, IRS, and it's a letter. This is what I highlighted that I want you to pay attention to. If you're eligible for advanced CTC payments and want to receive these payments, you don't need to take any action. So many of you have heard about the American Rescue Plan. Most of you, or a lot of you, have probably gotten some of the stimulus payments in the past from that. Another aspect of that American Rescue Plan is this child tax credit increase. So we actually got a child tax credit in the past, right?
That's right. Yeah. So the main change is that for many years, the federal government has given a child tax credit for those under the age of 18. And so for a long time it was $1,000. For a little while it's been $2,000. But as part of this rescue plan, they passed a change to increase the amount of that tax credit and also the way that it's actually delivered.
And now for this coming up tax year, it's all fully refundable. Is that correct? Whereas in the past, portion of it has been fully refundable?
Yeah, the portion was dependent a little bit on the age of the child, whether it was partially or fully refundable, but that's right. Yeah, so now it's all fully refundable, so you don't have to actually pay that tax to get that credit or that refund back to you, so that is a change. But the main difference is the increase in amount. And so if you've got a child that is under the age of 6, then their credit's going to go from $2,000 a year to $3,600 a year. And if they're between the ages of 6 and 17, it's going to go from $2,000 to $3,000 a year. So that's a big increase. But there's a few details that we feel like are important to make sure that you know about. And just so you know where we're coming from when we talk about tax stuff, your background is tax accounting, what you did your degree in college, and I grew up around a dad and in a family that was big on finance and taxes and all of that. So that's why we're talking to you about it, is we pay attention to this stuff. We nerd out a little bit on tax policy and how it impacts the family.
Yeah, it impacts all of us.
That's right.
Every family is impacted by it, and even though that's my background and my degree, the laws change every year, which is why we're talking about this. If you have to stay on top of it.
So huge.
That's hard to do when you are living life.
Well, not only that, but like we have even in the past, like if you don't do it right, you can end up owing a significant amount of money at tax time. And so we want to help you with that. And so just kind of walk you through a few of the pieces of the details of this change so that you don't make a mistake with it. I think that's the main thing that's on our heart today. So short video today, just walk you through some of these changes and make sure you're thinking ahead, because as Barie said, you don't have to really do anything for these payments to start coming to you next month, starting in July.
Yeah, because right now the plan is that half of what you're going to be allowed, so there's a formula for you to figure out how many kids you have, where they fall in the age range, so you figure out how much credit you're going to get, and then they are going to take 50% of that and divide it over July through December, so 6 months, you will get payments. So if you don't do anything, you're going to, just like you had the stimulus payment just show up in your as a direct deposit, you're going to see that happen. And while that might sound great, it could really impact you, especially if you are like if you have to pay your taxes on your own, right?
Right. So that's the main thing. If you are like we are in ministry, if you're self-employed, and it's not just pastors, it's a lot of people who are out there who are self-employed, and you set aside your own tax payments, throughout the year. You just need to be planning ahead and really being careful with this, because you could be setting aside too little money if you're expecting to get that full tax credit next year when you do your taxes. So that's sometimes where we mess up in this process is we think, oh, $3,000 a kid, we add all that together, we're going to get that tax credit in April when we do our taxes, and not realizing what's happening is 50% of that is coming now. So when we do our taxes next year, it's actually going to be 50% less than what we are going to get in totality. So anyway, the main thing in that is just to plan ahead, whether you are a regular employee of a company and your taxes get withheld for you, or if you're self-employed and you're setting aside your taxes, personally and making decisions on that, just plan ahead. And the main thing that I think we wanted to say is realize if you get part of this year, you're not going to get it again in April when you do your taxes.
And many people are used to they kind of live life and plan for getting a refund. Especially if you have a lot of kids, you're used to kind of getting that refund when you do your taxes in April.
That's right.
And so you have to be aware that if that's how you plan your budget, it's not going to look the same. You're not going to get these payments every month, July through December, and then still get that much money that you're used to getting. So
that's right.
You just have to figure out your own budget, where you need the money, how much, and make sure that your taxes are going to be covered.
That's right. So just by way of an example, so if you've got a 10-year-old child, so they are in that $3,000 a year tax credit now, so you're going to get 50% of that, so $1,500 starting in July through December in monthly payments. Okay, that's great. You get prepaid on that. But then when you're doing your taxes in April, you're going to get the other $1,500, not the full $3,000. So just process what you're going to get now, what you're going to get later, and then what they're saying is that you can opt out of getting the monthly payments if you'd rather get the whole amount next year. But for a lot of families, they want to get it monthly, which is fine. But just make sure you're prepared and planning ahead that you're going to get half of it next year and half of it this year.
Well, and that those payments will cut off. And so, 6 months is enough time to kind of adjust your budget to get used to that extra money.
That's right.
And it's not promised. I think that there's talks for them to extend this through 2025 maybe.
Yes,
right.
But that's a huge point. So right now, this law is just for tax year 2021.
So you don't want to redo your budget to get used to this extra money.
Well, that's right. And so you plan for the 6 months and you get these prepayments, but then they may or may not extend that child tax credit to go into 2022, 2023.
Yeah.
And so we just got to keep up with the details. And I think we're in a window right now as American families with kids where the law is changing and it's changing quickly. And it's just more likely that you're going to make a mistake if you don't understand what's going on.
Yeah. So another big change for our family. So we have a son who's going to be a senior this next year, but he's going to turn 18 before 2021 is over.
Right.
So we're not going to get any.
Right. That's the other thing you got to be careful about because it's the age of your child at the end of 2021, not how old they are right now. So that can throw you off too because we have a 17-year-old who lives at home. Like Barie said, he's going to be a senior in the fall, but we're still paying for most of his expenses and everything.
All of his expenses.
Well, so he's going to turn 18 in October, and so according to this law, we're not going to get a child tax credit for him in next year's tax process because he turns 18 before the end of the year.
Which, just as a side note, but I feel like teenagers are more expensive, and so why are they cutting it off at 17? Anyways, that's beside the point.
And so the other thing on the other end of the spectrum, like Colston, who is turning 6 this summer, so he's moving from that 5-year-old bracket into the 6-year-old bracket, and the way the government looks at that is how old is he at the end of the year, not right now.
So we will not get the 3,600.
That's right.
We will just get the 3,000.
That's right. So all that, you just got to sit down, especially if you've got kids that spread out in age.
Yeah.
How old are they at the end of 2021?
Yeah.
And then based on that, what is the tax credit you're going to get? And again, that tax credit is dependent on you making a certain amount of income as well. If you make too much income, you're not going to get that tax credit anyway. But you can read up on that and understand where your income falls on getting this tax credit. But just make sure you do the math and you know how old your kids are, how much the credit is for them, and then what 50% of that is this year and what the other 50% will be next year.
And if you're a divorced family, I think the rule is that for the child, it's whoever they live with for more than half the time. So both parents, 2 different households, are not going to both get a child tax credit for that same child.
Yeah.
So.
We know we're throwing a lot of information at you. This is a quick video, but we just felt like this is important, and we know that we talk about these things and how to plan for this. And we may do another video in the future as the law changes, as the IRS gives more information about how to opt in and opt out of these prepayments. But we just felt like we needed to get this information to you as quickly as possible.
Well, because the website opens up, I think, July 1st, right at the beginning of July, and we will link to it in the notes. But it's super easy. It's the irs.gov. /child tax credit 2021. And so again, we'll link to it, but you want to make sure that you're getting on there, because if you want to opt out, or I think you can adjust your payments, right?
Yeah, I don't know if they've set all that up yet.
Yeah, but it's supposed to be user friendly is what they're saying, starting July 1st. So get on there and look and see if you can adjust payments if you need to, like we're planning to do, or opt out.
Yeah. Let us know if you've got questions in the comments below, or things you know that you bring to the table, maybe something that we missed or we misstated. Again, we're kind of learning as we go on this thing, so let us know.
And did you talk about it being based on AGI, so it does phase out?
Right, that's what I was saying. Based on your income, will determine whether or not you qualify for the tax credit or not at all. And yes, that income, the IRS uses your adjusted gross income, your AGI, to determine that.
Okay, that's all we got.
All right, take care.